Hello, everyone, and welcome to our EEP training today. Sorry we're a little bit late. We had a few technical difficulties, but I'm going to go ahead and get started right away. Just to introduce myself, my name is Monique Manaya, and I've been in the mortgage industry since 1997. I've been in everywhere from broker, retail, wholesale, processor, loan officer, branch manager, but most recently I was the EEP production manager over at the government entity that we're going to talk about today. I ran all of operations, put a lot of processes in place, and was on the underwriting guideline committee. So I think that me bringing that experience here to you guys will help build and grow your business, especially EEP. But we also have Ms. Norma Summers. She's your account executive, and she also has a lot of experience over 2 decades in the mortgage industry with a background in sales, mortgage lending, underwriting, and mortgage insurance. So together, we will help provide you with all of the information and needs that can help you build and grow your business. So Trevisa Financial, one reason why we are here is Trevisa really focuses on building generational wealth for first-time home buyers and, home buyers in general. So that's one reason why we wanted to bring EEP here, is because it's a very, very big factor for helping with the generational wealth. So let's get right into the program. It's the Earned Equity Program. So if you're not familiar with the Earned Equity Program, how it works is we have a government entity, and the government entity will actually purchase the home on behalf of your home buyer. So you have your home buyer who is not qualifying for traditional mortgage financing, whatever the reason may be. So what you'll end up doing is you will submit a home buyer TBD file to TPO Connect. You will register it there, and then we will send it over to the government entity's underwriters and get you a pre-approval. And so this pre-approval is essentially saying that Tule River wants to enter into this relationship with your home buyer. They will go ahead and purchase the home. One of the biggest things about this relationship is Tule River is going to have them sign a homeownership agreement at closing, and there's a memorandum that is recorded on title. So this gives your home buyer the full interest in knowing that they're not vested on title, but they have the homeownership that is recorded on title. So it secures their interest in the property. So when we're looking at EEP and the functionalities, the biggest player in this transaction is going to be the government entity. At first, your home buyer, again, will go in, find the home of their dreams, put in the offer, put down the earnest money, and then Tule River will come in and everyone will sign an assignment agreement. This assignment agreement will then transfer the entire purchase contract over to Tule River. So Tule River will then be the one that will obtain the FHA loan to pay off the seller of the home, and then enter into the homeownership agreement with the home buyer and create a relationship with them. Some of the EEP program highlights that are just amazing to help your home buyer get approved is 3.5% down for I-10 non-permanent residents, including DACA. We have low and no credit scores. So we can go all the way down to a 580 credit score, and we only require one trade line over 12 months, 0 times 30. If there is not a trade line reporting for that long on credit, we do allow alternative trade lines. And we also have no scores. So if you pull credit for your home buyer and there's no score, we can still do that. We just need some alternative trade lines, 12 months, 0 times 30. In addition, we do have our 3-month bank statement program. It can be used for self-employed, 1099 commission employees, and your W-2 employees. If you are going to use bank statements for the 1090 or W-2 employees, the government entity underwriters will want a letter of explanation as to why you're doing that. For instance, let me give you an example. I had a client that we had a file where the home buyer was a waitress. So she had her W-2 wages that she made, and then she also had her tips that were cash. So for that reason, we used the bank statement program so that we could then just, instead of providing a plethora of documentation, we just went through and we highlighted where all of the tip deposits were and then highlighted her regular income that was deposited. So that's an example for using bank statements for a W-2 employee. All right, we also go up to a 50 over 60 DTI, which is huge. There's no source or seasoning of funds to close. So if you have a home buyer that is saving all of their money at home and they want to deposit it, a few weeks before closing, that is completely fine. We just need a letter of explanation in regard to, where their funds to close are coming from. And then there is no source or seasoning there's no bankruptcy seasoning. So if you have a borrower that's in bankruptcy, they look for a home, put it under contract, we can close that one day after discharge. And we go off of all FHA property types. So your 1 to 2 units, PUDs, condos, manufactured, single family, of course, and allow seller contributions up to 6%. So that definitely helps your home buyer when they're bringing in their funds to close. Okay, to go over a little bit about the self-employed home buyer, and when you're using the 3-month bank statement program, we do have an expense factor of 45%. That is standard. But we do understand that there's sometimes situations where you have a home buyer that's maybe service business related, product business related, but they don't have any employees, or maybe they only have 2 employees. We can get their expense ratio all the way down to 10% by providing a little extra documentation, typically a CPA letter or some online internet documentation that provides the proof of, what their business is and how many employees they have. So if you, do your income worksheet, your calculations, 45 is just too high, and they fall in this category, then we can definitely look at the lower expense factor to help them qualify. Speaking of qualifying the borrower, when you're looking at what borrowers fit for EEP, you're looking at specifically borrowers that don't traditionally qualify for income identification documents, such as your ITIN. We do have the full doc and the alt doc. For full doc, we only need 1 W-2 and 1 month of pay stubs, and then a written VOE. We also have verification of rents to only 12 months, and also employment's only 12 months. And when you're looking at assets, we can use gift funds for all of the closing costs. So for the closing costs for an EEP transaction, the fees involved are going to be right here. We are looking at the down payment and the FHA closing costs. So we are going to take the bottom line from the FHA final CD. And if you have seller paying all of the closing costs, we just need to make sure that we're still meeting MRI. So the minimum required investment of 3.5% down minus earnest money, okay? And then the government entity is going to collect their first payment up front, in addition to their entity fees, which are $12.50 underwriting processing fee, $150 notary fee. They charge a 0.5% homeownership agreement fee. If the property is in an HOA or PUD, then there's a $250 fee for that. And fees may differ in Texas. Let me let you know that gift funds can be applied towards these funds. Seller credit cannot. Okay, so when we're looking at the first payment and the entity fees, again, gift funds can be applied to these. Seller credit and concessions cannot be applied to these fees. So when we're looking at the property and wanting to qualify the property for EEP, again, they allow all FHA property types. We do get a full FHA appraisal. So if it is subject to, those repairs do need to be completed and 1004D provided. Now, if the property is a 1978 or older, then we do require a home inspection. And it's not just a 1978 or older, it's and or if your appraisal comes back and it's a C4 or greater condition-wise, then we need a home inspection. If a home inspection is required, then a certified home warranty is also required with roof coverage. When the entity is reviewing the home inspection, primarily they're just going to be looking at any major safety repairs that needed to be completed prior to closing. If there are any other repairs that they want to be, but they don't feel like they're a major concern, they do offer a 3 or a 6 month cure agreement that can be put in place instead of repairing up front. And because this is a non-owner occupied loan that the government entity is obtaining from FHA, if your property is in an HOA or PUD, we do require CC&Rs and bylaws. We need to confirm that there's no HOA restrictions in regard to purchasing this home as non-owner occupied. So when we're looking at the I-10 competitive market specifically, you can see that Trevisa Financial really outdoes all the competitors in regard to not only down payment of 3.5%, 3 months bank statements, DTI of 50 over 60, only one major bureau of 580. So we don't, if you pull a tri-merge and you only have one bureau, that's completely fine. As long as it's a 580 and you have that one trade line, whether it is traditional on credit or an alternative trade line, then that works perfectly fine. EEP really, really wants to make sure that everybody understands that they're wanting to protect the client's homeownership rights. They want to give them the right to use the property, to improve it, and then to sell it later, and then to earn and receive all of the equity. They also give them the tax benefits. So at the end of the year, your home buyer will receive a 1098 interest statement that they could use to write off all of the interest that they're paying on their mortgage with them. Again, through the memorandum of homeownership and the finance agreement being recorded with the county, it gives the home buyer, the security, knowing that the home's not going to suddenly be, foreclosed on because they did a purchase option with some individual that was pocketing the payments. So utilizing this program with a government entity and not an individual is definitely something that is important to bring up, because the government entity is really trying to help people get into homes. A few tips and tricks for when you are uploading and registering your file and it goes through process. We want to make sure that we're utilizing cover letters for those files that have some unique stories. So maybe explaining the credit situation or how you're structuring the income or where their assets are. So if you submit a bank statement and there's no funds to close, maybe well, not maybe, but we pretty much want a letter of explanation where the funds are at. They're currently saving their funds at home and will be depositing them. They're going to get a gift letter, things of that nature, so that the underwriter knows exactly what's in your mind when you're looking at getting this home buyer pre-qualified. Also, the 1003 needing to be fully complete. The pre-processors over at the government entity will send the files back to us if your 1003 is missing addresses, phone numbers, position types, declarations are not filled out. So make sure you're preparing and submitting fully complete applications for your home buyer. Letter of explanations on down payment, current home disposition. So if they currently own a home, what are they going to be doing with that home? Are they keeping it, renting it out? And then we also have income calculation worksheets to help you in order to, help calculate your home buyer's income, see where we're looking DTI wise. For the workflow process and setting the proper expectations, I think that this is probably one of the most important pieces of EEP, setting the proper expectations. EEP is very unique. It has a lot of moving parts. And especially if you're new to it, I will guarantee you your 1 to 3rd file is going to be a little bumpy and rocky. When I worked over at the entity, I had loan officers that as they started doing the program more and more, they can now close these within, some of them 21 to 25 days because they now know the program. They know how it works. They know what they need to do. But until you get there, setting the proper expectations with all parties involved is super important. First of all, we have 2 files. You have your homebuyer TBD file that's going to get submitted to the government entity. And then after it goes under contract, you're going to have your Tule River subject property file that's going to go through process and underwriting here over at Trevisa's Underwriters. That's the file we're going to close. We're going to use those funds to pay off the seller, and that file is going to get insured with HUD. So 2 files simultaneously, working conditions. We need 2 CTCs. So there's moving parts, but trust me when I say that it's completely worth it. In addition, our property. The government entity has an overlay that they require pest termite inspections in 35 states. And then also, again, if you need a home inspection, your property's 1978 or older, and or your condition comes back as a C4 or greater on your appraisal, we need a home inspection. This could cause delays if there's repairs. The home inspector took a little longer, making sure that the real estate agents are fully aware and setting those proper expectations for closing. Closing, this is not a same-day close and fund, unfortunately. Our government entity is out on a reservation in Porterville, California, and the closest FedEx and UPS is about an hour away. And and it picks up at 4 p.m. So with that being said, if your closing package doesn't arrive by a certain time, giving them enough time to wet sign the full package, get it, put together, drive out and drop it off, there could be delays with overnighting package. Wire transfers. Your home buyer is going to wire the full funds to close to Tule River. As soon as Tule River receives that wire, they will keep their proceeds of the transaction and wire the bottom line funds to close to title. I've seen wires be delayed. I've seen wires be accidentally sent to, they only put Tule River on the wire instead of the full Tule River Home Buyer Earned Equity Agency, for instance. So typically, if we close on a Monday, we'll likely fund on a Wednesday, so on and so forth. As of course, there's some different situations in Texas where that can be, the closing is set up a little bit different, but setting the proper expectations is so important. We have a lot of helpful resources for you. We have our EEP Support Center, which is our email. We have an EEP questions at trevisafinancial.com. We also have our dedicated phone line. So you can call, email, and you can get the questions, scenarios, anything answered that you may need to, for instance, you can even call if you have a file in process and you're just wanting a full explanation of how closing works. Things of that nature, we're going to be here for you. We also have many, many Trevisa resources in addition to the hotline and the the EEP hotline being the phone and the email. We also have these weekly trainings and Q&As at the end. And you can also set up your own private trainings. If you have a full ops department or realtors and you want to get a full training going, then we can also assist you with that. We also have flyers available, so you can have some of these flyers produced with your own name and company logo. Norma's your girl for that. We also have this training that I just provided to you now, to where you can add your name and your company logo to it if you want to start doing your own trainings and webinars for your realtor partners. So now let's get into Q&A. Okay, so a few questions. First, somebody wants to know what the name of the escrow company we use. So you can actually use any escrow company you want. We do have a list of approved title insureds. So it's not the escrow or the attorney that needs to be approved. It's specifically the title insurance. And so just, that we have the big ones approved already: Landmark, Westcor, Ticor. We have First American Title. So we have quite a few that are already approved. And if you do have to get somebody approved, getting that started right away is very important, because the board over at the tribe only meets once a month, and they'll need to be signing those waivers of sovereign immunity to get them approved. And no, this is not a first-time home buyer only program. If they've been a home buyer before, or if they already currently own a home, they can still utilize EEP. So the process from start to finish, when I was over at the government entity, the average loan was 37 days. And I'm not going to say that there were some that were a lot quicker, and there were some that were longer, and that was mainly because of property and repairs. So, if you already have a file where you already have the appraisal and all of that, I mean, you're definitely going to be looking at least 25 to 30 days, just because the process is a two-part process. But I think that as long as there's a lot of attention given to the file, and documents are provided as very quickly and as soon as possible, I've seen some go through fairly quickly. Actually, you know what? There is a title company in, I think maybe it's SoCal Title, but I think they do it all over California. If you want to put Natasha, if you want to put your email address in, I'll send you a list of the approved title companies. And then another question: do ITIN borrowers that only have a foreign passport as ID qualify for this? Yes, yes. We can take foreign passports and ITINs. I got your email, Natasha. I'll send that to you after our training here. Okay, so we have a question. For the income on the bank statements, do we highlight the incoming income before we submit the statements over? Yes. So, if you have a home buyer that is using personal bank statements for their their related business, then the underwriter wants you to highlight all of the deposits that are income related. Otherwise, they may do it themselves, and they might not utilize and count all of the income that is truly related to the business. So it is very important to highlight that income that is all business related. So very good question. No, we do TBD pre-approvals. We actually prefer TBD pre-approvals. So I actually do a training on Tuesdays, Wednesdays, and Thursdays on I go deeper into how the two file structures work. I explain what needs to be in each file, how the process flow works, and then I do a demonstration of submitting a file and a Q&A after that. So if you want to join that and sign up Tuesday, I think it would be really beneficial for you. But yes, we do the TBD pre-approvals. You're welcome, Bernadette. I'm so glad all of you joined. There's so many people here today. I love it. Do you guys have any other questions? I know EEP is so amazing. It just really truly we had a closing the other day and the loan officer sent us a picture with the family and it just brought tears to my eyes. I just love this program so much of how many people it really helps and benefits. And so I'm glad you guys are all here to learn about EEP. No, no. So the borrower is not vested on title. Tule River is vested on title. Okay. So simultaneously at closing, while Tule River is signing the FHA loan docs, either same day or the next day, your home buyer is going to sign the homeownership agreement. That homeownership agreement is binding a relationship to where your home buyer is purchasing the home from sorry, I've been talking a lot, from Tule River on contract, and that is getting recorded on title after the first trust deed. So they have that, even though they're not vested on title, their homeownership agreement is on recorded on title. So Tule River cannot do anything with the home without the home buyer agreement or knowledge or anything like that. And then once the home buyer maybe they're self-employed and they just have been writing off so much in taxes. And so they're going to spend 2 years to, get their affairs in order to where they're going to file taxes and, pay the taxes, not write a lot off. They can then assume the government entity's FHA loan after, 2 or 3 years. And then after 210 days, 6 months, you can come in and streamline them down to a lower rate. So you have a, a borrower for life. Um, and even the same with citizenship. After citizenship, they can go in and streamline or assume the FHA, the government entity's FHA loan. Another thing that you may want to remember is that let's say they're not bettering their situation, they're still writing off taxes, they still have an I-10. After 5 years, their family has grown and they need a bigger home. Well, they can sell this home that they originally purchased. They can take all of the equity. So let's just say after 5 years, they gained about, let's just say 50,000 in equity. All of that equity is theirs. They can put it down on a bigger home for their family and utilize EEP again. But this time they were able to put even more money down. Then they can do it again in 2 or 3 years if they decide, there's a better house out there or different location or a job transfer. So, all of the equity is theirs and they get to utilize it through sell. Yes, taxes needs to be current, but the taxes is built in. Do you mean like income tax or property tax? Sorry, I just want to make sure that so there was a question, do taxes need to be current income tax? Um, no, no, they don't actually. If you're going to use tax returns to qualify, then yes, they do. If you're using bank statements, then you don't provide tax returns, and so they don't need to be current. No. I would say the 3-month bank statement program is probably utilized 80%, 85% on this program. And ITIN home buyers are probably probably the same, 80, 85%. We have another question coming in. Yeah. She said, thanks. I'm going to go with the bank statements. Yeah. It's probably the best and the easiest way to try to make everything work when, you're looking at it on paper. But yeah, definitely highlight those deposits that are income related. And then in our TPO Connect portal, we do have the worksheets, the income calculation worksheets. I have a new one that I just got directly from the entity. It's the one that the entity uses, and we're going to have that uploaded here shortly for you. All right. Did you guys have any other questions? Norma, did you want to say anything before we let everybody go?
Thank you, Monique. So appreciate you. Everyone, we've just shared with you a really great program, as Monique mentioned. There is so much here that we've provided for you. We know it's a lot of information, but know that you have access to the 800 number for this program, and you have access to the email address specifically. And Monique handles that, so you will be getting directly the answers from her. So again, thank you again for making time to join us, and we look forward to seeing your loans. Thank you.
Thank you, guys. Bye-bye.